Okay, I think this is an important date here with regards to the earnings call, May 19th. And remember that last date, and I'm just going to do a couple snips from the call here that I think are important. Let's listen to CEO Dan here.
Systems and components off MIH would provide us that opportunity. Since our last earnings call, we have made progress on the terms of a contract manufacturing agreement and an agreement under which we would develop new vehicles in collaboration with Foxconn off of the MIH platform. While definitive agreements have not been reached and may not be reached, I believe we're close, and our relationship with Foxconn remains very solid. This past weekend, Foxconn agreed to extend the down payment repayment deadline under the APA from May 14th until May 18th, the day before our annual shareholders meeting, to provide a little more time to conclude our transaction.
Okay. So, is this a positive or a negative? I think I don't know. I'm leaning 51% positive here because it looks to me like they're doing a little theatrics here and they're going to hold back the announcement for the shareholder meeting. That would be my opinion. So I would think this is 51% in favor. Now, previous to this, he was discussing the joint venture with Foxconn. The deal requires the manufacturing agreement, but I think that it can be done without the joint venture. But I think this all implies, in my opinion, not a financial advisor, lawyer, or engineer, that the announcement is going to be positive and withheld for the stockholders meeting. That's just my opinion. But I don't think it's a coincidence that the timing of this is as it is. I just have to say 51% in favor. I think there's going to be a favorable announcement at the shareholder meeting. Okay, this is the president of Lordstown talking about the joint venture on the call with Foxconn. Let's take a listen.
Switching to our product development relationship with Foxconn, as Dan mentioned earlier, we have been working on an agreement with Foxconn to jointly design, engineer, develop, industrialize, and launch battery electric vehicle programs using Foxconn's MIH Mobility and Harmony open platform. Co-developing EV programs is aligned with the EV market ambitions of both companies. We have an experienced and motivated team with the capability to develop new vehicles from concept through launch. If reached, this agreement would create an innovative business model where we would develop new vehicles for ourselves and potentially other OEM customers globally. These new vehicles would be built for North America at the Lordstown, Ohio plant and at other Foxconn contract manufacturing locations around the world. The objective is for OEM users of this flexible MIH platform, manufacturing footprint, and supply chain to achieve production scale at lower volumes with a shorter time to market.
Okay, that's it in a nutshell. I just would say that part of that deal is that it raises money for Lordstown. Okay, the fees they would have designing. Also, they're talking about developing programs for Lordstown internationally through Foxconn, as well as those made at Lordstown in America. That's the domestic. International is Foxconn. That's the branding, I believe. And Lordstown would develop these vehicles, sell them in the U.S., Foxconn would manufacture them internationally and sell and distribute them internationally, paying, I'm sure, a per unit royalty to Lordstown. I believe that's how it's intended to work, and this is a source of revenue for Lordstown.
For LMC in particular, this agreement with Foxconn will provide a scalable vehicle development platform, reduce our product development costs, and increase the breadth of our product portfolio. As Dan stated, while our discussions with Foxconn have been constructive, at this stage, a definitive agreement has not been reached.
Okay, so again, everyone is sticking to the rules here. Both parties have to agree for any release of information, and they have jointly announced that that's going to take place the day before the stockholders meeting. Okay, this is the CFO, and he's talking about the capital requirements of Lordstown going forward this year. So let's just hear what he has to say.
Launching commercial production of the Endurance, as we believe that getting the vehicle into customers' hands will serve as the key catalyst to driving sales and the success of the program. I'm hyper-focused on managing our cash position and evaluating the trade-offs required to get there. On our last call, I guided that our business plan required in the area of $250 million of new capital this year, of which a large share was needed in advance of starting commercial production in Q3.
Okay, so that was the last guidance, was $250 million required.
As you all well know, the capital markets have not been open for the sector. Notwithstanding, we continue to work with our advisors on available financing alternatives. However, with our options limited at the moment, we are taking a balanced and disciplined approach to allocating our current capital. For now, we are pursuing a business plan that will give us the best opportunity to launch the Endurance and hit our initial production target. As a result, we believe that the new capital required this year is around $150 million, including our minimum year-end cash target. This is in addition to the remaining proceeds from the sale of the plant to Foxconn. We will primarily hold off on the hard tooling investments originally planned for this year.
Okay, so what he's saying is, in addition to the income from the Foxconn sale, I think it's $250 million total. There's $30 million plus $27 million in reimbursed expenses at the close. In any case, in addition to all of that, they have to raise $150 million, which is $100 million less than was previously expected. And this is the CFO doing his work. So we can all pull up our socks. It's $150 million cash raise they're going to have to do. With the announcement of the joint venture, this is going to be, easier. I believe from the call information, it's my opinion, 51% in favor of the favorable announcement of the agreement, and that should facilitate the raising of the $150 million, whether that be debt or other factors, perhaps a stock sale, so on and so forth. Let's just hear what he has to say, the rest of it.
Along with other investments and operating costs that we will defer until we raise sufficient capital. The principal trade-off is a delay in the bill of materials cost reductions resulting from the move to hard tools. Late last year and in Q1, we kicked off some of the tooling, but as we discussed on the last call, hard tooling generally has long lead times. So other than relatively modest inflation, our BOM cost for 2022 is not meaningfully impacted by the deferral. To be clear, we are not stopping the work we're doing on hard tooling or VAVE. We will have a detailed plan in place to execute if and when we raise sufficient capital.
Okay, so in other words, they're making moves to cut capital requirements to get the truck into production. And with the general number that's given later in the call, I believe, is that at the end of the day, at this point in time, basically before any proceeding to production, the cash balance is about $300 million, which is about exactly where it was before under Schmidt as president, when the endurance production was slated to start in September of last year. So that is where we are financially. So we're looking at a $150 million cash raise and a $300 million balance. And with the announcement, I feel there's a 51% in favor of the Skinny Bull, in favor of the announcement at the stockholders meeting that would announce the asset purchase agreement was completed. Okay, this is the question and answer period. I believe this is a Bank of America analyst asking about the Foxconn deal. And I don't know how much we're going to play of this. Let's just hear what he has to say.
You guys alluded to a payment that was going to be made on 5/14 that got delayed to 5/18 prior to the shareholder meeting. What is the amount of that payment? What's the nature of that payment? And what gets triggered if that doesn't get made? I'm trying to understand that.
Yeah, John, it's Adam. The 5/14 date is the date that required us to repay the down payments to Foxconn for the transaction. So that was the date, again, if we didn't close by then, but as Dan said in his remarks, that date has now been extended to the 18th. So it's just, that was the date at which, again, the payments had to be repaid, but we've extended it. Does that make sense?
Well, okay, so that means the $250 million that's been paid by them so far would need to be repaid if you didn't close the deal. I mean, is that the? I mean,
not all 250.
It's 200.
200, yeah. So when I said 250, the 250 was 50 of common that they bought last October.
Okay, so that's a change in the amount to be repaid is 200. That's a significant change from what my understanding was, and significantly less than other people have mentioned in certain videos and so forth. However, still a significant amount, 200 million, for a default on not closing the asset purchase agreement.
So down payments on the deal have been 200.
Okay, so I'm confused. So why would it be delayed for 4 days, and what happens if for some reason it's not consummated?
Well, the delay is, it's a complex deal. We've been working on it hard with them.
Yep.
So when we originally signed the deal in November, that was the date that we had set to try to get everything done, and we just haven't gotten everything done.
Okay, so the explanation for the delay is complexity. And this is a earnings call under the aegis of the SEC and an pending SEC investigation, carefully parsed language. So that's the explanation. Complexity. Not any other reason is given.
Gotcha. Okay, but I mean, if you had to make that, I mean, it's basically chicken or the egg, right? If you make the payment, the deal goes. I mean, if the deal goes through and you make the payments, then you have the $300 million. If it doesn't, you have the cash on hand, and are walking through the rest of this year and raising the incremental $150 million. I think you mentioned. Is that viable?
So again, with the deal signing, their basic cash position is $300 million. And a need to raise $150 million. And as I said in previous videos, I believe that the 300 million is enough to start production of Unit 1. That's enough to get them started. I don't know how many units they can produce with that 300, but that is again the same position they had under Schmidt when they were going to start production in September of last year.
No. So John, we've said in our public filings, right? If the loan comes due or the down payments come due because we haven't closed the deal, we wouldn't have the cash to fund it. So we do have to close the deal in order to avoid that. And we expect, like I said, we've had constructive discussions with Foxconn. It's a complicated deal. It's not just a simple contract manufacturing agreement. The joint product development agreement is.
So, a slip of the tongue there, we expect. He mentions the contract manufacturing portion and also mentions the joint venture portion of the deal. I had mentioned one possible outcome was splitting those up and putting one on hold and doing the other. The contract manufacturing is required by the AIP. I don't believe the joint venture is, but it sounds to me like it's all in on this, both deals.
It's fairly complicated, so it's taken a little bit longer than we expected. But again, I would say we're in a constructive dialogue, and I think the fact that Foxconn agreed to extend the repayment deadline, is a good sign.
I agree. If they wanted to end the deal, they could have months ago. But again, skinny bull case, 51%, black box. We can only parse these conversations out. Let's see what else is left here.
Okay. And then if we think about the cost greater than the price, or the BOM cost greater than the price at the initial point of sale, I mean, I guess that's, given everything that's going on with cost inflation and the cost of ramping up, that's probably not too surprising. But, as you think about, 1, 2, 3 years out, when do we kind of reach that crossover point, or when do you sort of project to reach that crossover point? Do you actually, on a per unit basis, start to turn to break even to profitability?
Hi, John, this is Edward. Thanks for the question. It's really capital dependent. As we said, we have a plan to bring down the BOM costs through the hard tooling investments and our VAVE projects. We'll continue to work on those, but we have a plan to get there as we raise the capital to invest towards those hard tools and those.
So Hightower goes on to explain that the reduction of the bill of materials to the point where the endurance manufacturing is profitable per unit is capital dependent. So, in other words, once they raise the money, the additional money, they'll be able to invest in these hard stamping tools and other tools. I'm not an engineer, but they're going to lower the bill of materials cost for the endurance. As they said, as the CFO said, they have stalled off some of these. See, what they're doing, in my estimation, not an engineer, financial advisor, or lawyer, is they're forestalling everything to get the truck into production and get it delivered to customers. And that point will create, for example, let's just spitball here. Carl Icahn, Carl Icahn is not going to invest in any company that hasn't got a product in customers' hands. He's not going to invest in vaporware. I'm not saying Carl Icahn is going to invest in this company, but I'm just using that as an example. So I think DJ Dan knows this, and they know that they have to move into commercial production, and with that a capital raise, with that a lowering in the bill of materials cost, with that hopefully a profitable unit cost. So, in summation here, I'll just say I think the call was positive. I think the timing of the decision is intentional. I am interpreting that as a positive breadcrumb of 51% in favor of a favorable announcement at the shareholder meeting. The call, I think, can give everyone more confidence in the CFO, who has lowered the required capital needed and appears to be in complete control of this budget to get this truck into production. And of course, Hightower is the program manager / president. Hightower has launched many vehicles. He knows what he's doing. So all in all, I think a pretty positive call. As we can see, they're moving step by step to get this truck into commercial production, which is the key to everything. Okay, just to close this out, full deal, 51% likely in my opinion. 300 mil cash at the end of the year, or following the close of the deal at the end of the year. There's a $150 million capital raise needed. They can do the start of commercial production and sell the truck. The thing is, for them to get to profitable sales, based on what the current costs are anyway, they need the hard dies. The lead time for the hard dies is 12 months. And that is how it stands right now. So, it looks like they can get into production. The hard die lead time is an issue, but they can still produce. And that is as it stands right now. Who knows what's going to happen with materials. Overall, a positive call, I would say, regarding the deal especially. And the hard die issue was a bit murky. Let's leave it at that.